Hello, everybody. This is John Blank. Today is Monday, March 23rd, 2026, and we are going to go through a study of 16, about a quarter, of the 52 Zacks industries. And we're going to look into the stocks in those industries that show the strongest returns. So, stock returns in 16 industries will be part one. And then we'll finish up with a little review of the U.S. Strategic Petroleum Reserve, a timely subject that has come to pass with the sudden Iran conflict emerging into this story. So I will have a current event part two, but the most important part of this information will come from part one, and it will be about these 16 industries and their top stocks and how the metrics play out for the U.S. economy and the market overall. It's a very timely subject for all this granularity to emerge and to be handed off to all of you. This is my views. I do have a PhD in economics from MIT, and they are not necessarily the views of Zacks Investment Research. So, like I said, we will get through 16 of the 52 industries. And I want to point out, the number 3 industry in our code is food. Number 9 is leisure services. 16 is medical care. 17 is medical products. 19 is chemicals. And down here, we're going to get into the computer stocks. Keep these in mind most definitely. 32 is consumer software services. 33 is the semiconductors. So again, 33 is the semiconductors. 34 is electronics. Here at 42 is oil E&P. We're going to also see them emerge. And then down here at the bottom, we have 52 real estate. 49 will also make an appearance in insurance. So there are industries that are going to leap out, and I've announced them right here, that are going to keep our interest, and we're going to find out the metrics that make them active for our study. So again, these are the share metrics that are in the industries. And why we're doing this is very simple. We can learn from the outperformers and the underperformances. I'll put a R in there for you all, and that will straighten that mess out. So on we go to our first annual 2025 and year-to-date 2026 returns for 8 Zacks industries. Now here I've circled for you the yearly returns in percentages, and then the year-to-date returns in 2026. So this will be true here and in here and here and here. We've also got under red the industry. So here's food industry number 3. Here's leisure number 9. Other consumer discretion number 12. Medical care products at 16. Medical products at 17. Chemicals here. And then, of course, as I mentioned, computer software services at 32. And electronic semis at 33. Now, here's 2 things to point out. Year-to-date returns for the software services are, of course, all negative because of the sell-off in AI. And over here, we get the picks and shovels story. Large cap names almost exclusively in the semiconductor space because they're just so big and so powerful. But these are 2 things to keep very much in mind. It is an AI-driven stock market and economy, and you can see this here in the year-to-date returns that people getting worried about these performances. Of course, over here, they've been incredibly strong. So keep in mind, yes, they have sold off, but they have really risen dramatically in 2025. And of course, these have risen, and there's not as much of a sell-off in the picks and shovel names, and now all these are large cap stocks. I'll take that, for example, over here to a very different story, which is the food industry. Last year, they actually did very well, and this year they're also holding up. It's a very different industry this year, leader in food, and last year it was the semis and the software stocks. Now it's just the semis. So very different breakdown. And then, of course, taking all this. Now, notice here is SC, MC, LC. That is small cap, mid cap, and large cap. And I just want to point out, again, we're going to look at these top names in the yellow. I've outlined them. And you can see a lot of them are small cap and mid cap names. Lam Research will be the exception here. But keep in mind, that's what's interesting here when we look at the outperformers. We're going to get into names we don't generally get a chance to review. For example, the food industry, Seneca Foods Corporation, ticker SENEA, It's a major supplier of canned and frozen vegetables, vertically integrated farm to shelf, works directly with farmers. Leisure Services, Expedia Group, travel infrastructure company, aggressively leveraging AI through trip planning and chat assistance. It recommends trips, automate customer service, and it's boosting booking conversion. So think of Expedia as an AI core growth industry. Consumer discretionary, Lincoln Educational Services, ticker Link, career-oriented training, not traditional degrees in Georgia, Texas, and Nashville. They put these little campuses together, physical campuses rather than purely digital for people, but they're in trades. Medical care industry, new techs, fast-growing, disruptive healthcare model, micro hospitals. So micro hospital, very small hospitals, working for them. Medical products, Claritiv Corporation, healthcare cost management and analytics. So again, a lot of costing in this business. So Claritiv has come along to find a solution to that. Perimeter Solutions, fire retardant, firefighters. So this is a niche business in chemicals, not one of those big players. Computer software services, D-Way Quantum, QBTS. This is quantum computing company. Of course, we know about this is next generation chips. And then down here, of course, Lam Research, which is picks and shovels, as I mentioned. They supply the machines that make the chips rather than the chips themselves. But that is this whole story of what's hot in that sector of this economy. So on we go to more in this business. Again, yearly returns here, year-to-date returns here, electronics here, E&P, oil, banks, and thrifts, finance, down here, insurance, and of course, the investment bankers and managers. Again, notice I circled the year-to-date returns have fallen here. This is the private credit debacle and the sell-off of the stock market of late. You can see this is also carrying through to some degree to the investment fund industries and not so much to the real estate. So again, we're seeing early weakness in the software names and we're seeing it in the investment brokers and managers, but we're really not seeing it in things like the electronics industry per se. Oil E&P, still not showing us anything but good news, and you can see that here and here. Oil E&P will show up as something that's doing strong here, and we know that is another story for 2026 and not 2025. All right, let's take a look at these industries. Electronics industry, Celestica, ticker CLS, behind the scenes tech infrastructure provider. They do the data centers, cloud, and AI systems, and they're moving from low margin to high margin businesses. So that's what we've always known about Celestica, but now they're moving into higher margin businesses, much like Micron's doing with chips. Celestica's doing it also with infrastructure. Oil E&P, Permian Basin Royalty Trust. Of course, the Permian is domestic, and that's where people are going to make their investments in the current situation. So keep in mind, Permian Basin Royalty Trust, ticker PBT, may not be a name that you know. It's not a big name, but it's a very important one now. Okay, banks and thrifts. Customers Bancorp Incorporated, fast-growing regional bank, and what they do is they combine commercial banking with digital fintech. So again, this is taking a regional bank and do some fintech work with it. Finance industry, Hut 8. This is a Bitcoin miner that's moving into AI and energy infrastructure. So we've known about the Bitcoin miners for a long time, ticker HUT, but now they are moving into supplying some of these data centers in this whole environment. Prudential, of course, you've known them for years, but they're an Asian Africa-focused life insurance company. So they've been moving their businesses into a stronger growing area. Investment brokers and managers, Grupo Val Acción y Valores. This is down in Colombia. Strong player in an industry area you probably haven't overlooked. And now, of course, I've got iShares South Korea in investment funds, EWY. Of course, this is sold out big time, but the momentum was extraordinary. This is picks and shovel stuff. And then down here, we got Diversified Healthcare Trust. Again, a healthcare-focused REIT, ticker DHT. Healthcare has been where the jobs have been coming in this economy, and that is showing you that that's where the real estate is strongest. Keep in mind, again, as we look into this, we're going to jump out at how we can really understand the granularity of what's going on in this economy. Okay, so again, here's our industry classifications. I got a top profit margins, and down here I got price to sales. This is valuations. And these are profit margins. And I just want to point out who's jumping out at us. High valuations and profit margins. Of course, like I talked, 32 and 33, semis and the computer software groups are definitely screaming as both plays right now. And of course, outside of that, we do have real estate at a very high valuation, but it's coming down, as you can see. But this is just more a business substance to the industry versus here where you can definitely see everything moving ahead. The one thing I'm also picking up here in the more traditional sense is oil E&P. That's going to be a very strong net margin for the exploration and production. That's another area that people are mining right now for returns. Okay, again, looking here now, I'm going to return on equity at the top up here and enterprise value to free cash flow, so valuation down here. Again, who jumps out? Electronic semis, electronics, the E&P guys. And of course, one small addition is the chemical industry. For all interesting stories, there's always something. But I think this is the real story here. Look at the return on equity for this business, and that is industry 33, which is the semiconductors. And you can just see that rapid ascent from 2022 to 2025. That is the story of this economy. The picks and shovels have been extremely strong. And we're just going to see that over and over again. If I look back, there's the picks and shovels here, and there's the software services. So this has definitely been the spot to play, and will probably remain so for this year as well. I don't know about further out, but certainly for this year, next 9 months, we're going to see more from that. All right, so now we're in the price to free cash flow. And down here, we've got cash flow yield. So the cash flow yielders, actually, we're getting a food industry play. Industry 3 is actually doing quite well with cash flow yield, and the other one is insurance. So you don't have to always be in these big, tech stock areas. Of course, they are the best ones. There they are again, electronic semis jumping out at us. And the oil E&Ps guys jumping out at us again. But down here, we've got two new names, the food and insurance companies, that are also providing some lift in this scenario. Okay, down here, I don't want to bother with the quick ratio. It's not important to us. I just want to point out where the debt to capital ratios are very high. These are industry-specific things. Of course, leisure and real estate have a lot of debt to capital because they have a lot of properties. You can think about this as amusement parks and, big REITs and things like that. They're going to have a lot more debt to capital than other types of businesses. Over here, we got reinvestment rate up here. I'm going to skip the depreciation and amortization, but again, who has the highest reinvestment rates, which is a growth indicator? Yes, the semis, and yes, electronics. So it should not surprise you in an AI-driven world where the picks and shovels are playing out that I am picking up that the semiconductors and the large cap names that are in there are playing the major role in supporting this market. And of course, we all know that, but I'm confirming that. And we also see software services have been actually on a very strong profitable trend. They've been sold off lately on fears of that loss of share. But at the end of the day, they are, over at least a few years, doing quite well with their profit margins. And they're probably, again, I'd probably be a buy the dipper on the software services. All right, now I'm going to finish up today with the Strategic Petroleum Reserve. I just want to point out, first off, a really interesting story is how the oil market really is. I mean, we got lots of big names, Saudi Aramco, ExxonMobil, Shell, Rosneft, which is the Russians, Suncor, which is the oil sands. Down here, we got PetroChina, we got Petro Venezuela, Kuwaitis, Abu Dhabi, Petro Brazil. First off, I want to point out chemical composition, particularly sulfur content, which is over here, broken out for you. Low sulfur content, that's going to give you aviation fuels like here and down here in China with the petrochemicals. High sulfur content, that's going to be your asphalt, heavy fuels, and fuel oils. Over here, you can see fuel oils are 60% and 50% for high sulfur content, whereas gasoline will be 45% and 45% for low sulfur content. So what goes on here is this API gravity, American Petroleum Institute Gravity. It's a measure of how heavy or light petroleum is relative to water, which is 10. So it's an inverse thing. So the higher the thing, the more light the thing it will be. For example, Here I got a 39 API and a gasoline ratio of 45%. Down here I've got a 20 API and a fuel oil ratio of 50%. So again, you can use API gravity or sulfur content depending how you want to look at this, but I do think it's interesting that water is 10. So these are much lighter than water, much lighter than water. Okay, on to the next one. This is the story of the Petroleum Reserve. I just want to point out we've had it since the 1970s and the last oil shock. And it has a connection to international management, and we have treaty obligations to do so with this one. I just want to point out, from the 90s through the 2000s, releases were very small, 17 million, 10 million, then 30 million. The big one came during the COVID pandemic. We did 260 million release. And then, of course, the Russia-Ukraine war, 180 million release. And during the Russia-Ukraine war in 2022, we did get a 17 to 40 cent change in gas prices. That is as much as you can expect. And that's what I want to point out here. We have 700 million barrels in there, potentially they've drained down. Of course, we've used it a lot more late in COVID during the Russia-Ukraine war. But the most you can expect out of this is 17 to 40 cents. So don't keep this in mind that we've really changed our direction and trajectory with these things. But even if you do these bigger numbers, you don't get as much of a price change as you like. Keep that in mind. So out here, I just want to point out again, the trigger event was the 73 oil embargo. We have the IEA coordinating releases. The International Energy Agency will coordinate international releases. And here's all the releases that we've played roles in. Of course, like I point out, the Russia-Ukraine war is probably the biggest one that has certainly come to pass that in the recent time, along with COVID. And then there's been other ones. There was a civil war in Libya in 2011. We had Hurricane Katrina in 2005 and Operation Desert Storm. So, again, looking back over history, this has been happening a lot. We also have, I want to point out, 4 primary storage sites, and we'll get into where they are in the next slide, which I think is fascinating. Where are these storage sites? Bryan Mound, Brazoria, Texas, Big Hill, Texas, West Hawkesbury, Louisiana, and Bayou Choctaw, Louisiana. So our strategic petroleum reserves are down in Texas and Louisiana. And this fulfills our IEA treaty obligation. They are managed by the Department of Energy. And the authorized capacity is 714 million, and we've got 400 million in there now. So, we've done at most 200 million in years past. I would expect we could do, take another 200 million out. But again, 17 to 40 cents a change in gas prices per barrel. And that would bring us down to a very low number on this as well. I expect it to happen, but I don't expect this to be a solution in a major way, and that's what I want to point out. We really are not seeing a major tactical solution if we tap the Strategic Petroleum Reserve in manners like we have in the past. All right, I hope you enjoyed this. Thank you for attending, and I am the Chief Equity Strategist and Economist here at Zacks Professional Services. And you can get a hold of these slides by calling us at 866-794-6065, sending us an email, strategycall@zackspro.com, or finding us on the web at www.zackspro.com. So again, 866-794-6065 and strategycall@zackspro.com.